Vinay Jaising, Managing Director at JM Financial, is now with us on the show. Vinay, we've gone through a very long period of consolidation. Are you getting the sense that perhaps time-wise, the consolidation is now behind us and market is ready to make a move?
I believe so. A couple of reasons. Firstly, if you look at India versus the rest of the world, Nasdaq is up this year about 13 to 14%. MSCI India is down 5%. MSCI World is up 6%. So there's been an underperformance of about 12 to 13%. Every data we get from the government seems to make us smile. The manufacturing index is up. It's 57, 58 in terms of numbers. The crude prices have corrected. Coal prices have corrected. So a current account deficit, which was a negative number, is going to be positive for this quarter. So we also believe that the dollar will get weaker versus the rupee. So I think this is the time for India to do better. Also, if you look at the quarterly results, not just of banks, which have been always very good, but the overall market which has come out, about 40, 45 stocks results have come out. You're finally seeing a profit growth of 13 to 14% all put together. Obviously, if we add the banks, the numbers move up to 18 to 19%. So I think the growth is coming back, commodity prices coming down is helping lots of players. The CapEx cycle is set to sink. So we are getting a lot more constructive, the Indian market.
But Vinay, typically the earnings picture is always stronger in the first half of the year. It's towards the end that the picture turns a little more murky. So right now, yes, earnings growth is sustaining at high teens. But is it sustainable, do you think, at these numbers?
So I think a couple of things. The Indian corporate balance sheets have delivered a lot more than ever before, which means the interest cost is not going to hurt them. So that's point one. Point two, the productivity for most of the companies because of them learning from COVID has improved. Point three, the demand numbers, if you look at banking results, they're sticking to a 15% plus loan book growth for an average company. Companies like HDFC Bank are 19 to 20%, ditto ICICI. We had Bajaj Finance results come out again, a 30% top line growth. So that's telling you that the demand is growing far higher than what one would have expected. Now, if this demand number is going and if you expect interest rates to move down in the next couple of quarters, I think the overall India earnings is just starting to take off as against the other way around.
Okay, all right. Hi, Vinay. Good to hear your thoughts, and you're sounding a little bit more optimistic as well. And as you say, the earnings season actually has been a little bit better than what people were expecting. So good news out there, and appreciate you. I think you're not joining in from Mumbai. I believe you're in Chennai today. So good to have you on the show. Vinay, let's focus on a couple of themes and stocks that you like. You like the domestic themes, I believe. So, and from the cement pack, you like one of the largest names or the largest name, which has grown capacity multifold in the last 12, 13 years. And you like another stock, which actually hasn't grown any capacity in the last 7, 8 years, but valuations are attractive. Ultratech Cement in Orient Cement. Go ahead.
So, you said it perfectly. So one, to build a new Ultratech Cement is going to take eons. You probably won't have it at least in our lifetime. And a company like that will certainly gain when the Indian government is increasing capex. We heard in the budget the overall PSU plus government spend is going up from 4.1 to 4.9%. So demand is robust. Now to beat that, what is happening is coal prices, which averaged about $250 a ton last year, are at about $140 a ton. Every $10 a ton reduction in coal prices improves about 30 to 35 rupees per ton the EBITDA. So if you've got $100 per ton reduction, I think the entire cement sector could see 300 to 350 rupees per ton improvement at the EBITDA levels. One of the most efficient companies and big companies is Ultratech. Again, one of the most efficient and small companies is Orient Cement. Orient Cement is at 5 times EV EBITDA. It's finally increasing its capacity from 5 million tons to 8.5 in the short term. But if you go a little ahead, they would be going to 18 million tons in the next 4-5 years. They're not very levered. Valuations, as I said, at 5 times EV EBITDA is compelling. And they're pretty efficient on the cost curve. So both these companies we really like.
All right. And, that's the domestic theme, but you had like some export stories as well. And some that are replacing imports. Everyone said chemicals was the place to be in. And some said, okay, that's the end of chemicals. A lot of those stocks have corrected. Name a few of them that you liked. I believe Gujarat Fluoro and a couple of other chemical names is what you like.
Sure. So, on the first theme of chemicals, where we, though we are a little conservative or bearish, the dollar, we think we're going to be at 80 levels. We need to have some exposure to the rest of the world or the Make in India theme. And I think the best place to play it is firstly the chemical names. Three names which come to my mind are Gujarat Fluoro, the fluorine chain, Archean, the bromine chain, and Tattva Chintan, which will give you an EV angle along with the flame retardant story. And all three of them, in terms of valuations, to us are appealing. Archean is at about 10 to 12 times 1 year forward. Gujarat Fluoro is at about sub 20 times 1 year forward. Tattva post its correction, it's almost halved, is also at about 24, 25 times. So all of them, will get you a dollar exposure. But more importantly, these are niche markets for them in the rest of the world, and the demand, give or take change, may not be painful. Tattva has an interesting China angle as well. Wherein CV demand increases Tattva's output, so that should also gain for the same reason. You also commented on one more thing, not just the domestic demand growth, but also, when you're looking at not directly Make in India stories which go abroad, but, those which are replacing abroad. So we are very positive, the defense chain as well, be it Hindustan Aeronautics or be it Bharat Dynamics.
Okay. Vinay, we'll have to leave the conversation there. We've got an earnings reaction as well to look at. Thank you very much for joining in. Before that, let's go across.